Goldman Sachs' first quarter earnings report showed an uncharacteristic stumble, reporting a profit of just $5.15 a share, missing the $5.31 mark expected by analysts. Joining us now to discuss what went wrong is Deputy Banking Editor Aaron Lucchetti. Hi, Aaron.
Tanya.
Good to see you. So profit and revenue fell short of expectations. Meanwhile, the other big banks have reported so far showed growth, and analysts did expect Goldman to have a strong quarter. So what happened?
Yeah, pretty surprising morning. Goldman has its first miss in several years that wasn't due to some kind of regulatory settlement or fine from the government. And so this was a straight trading miss on revenues and on earnings. And it was doubly surprising because JP Morgan, Citigroup, and Bank of America had turned in pretty strong results from their trading operations in the first quarter.
And shares of Goldman fell 4% in morning trading. So
shares of Goldman fell 4%. They've had other bad trading quarters before in recent years, but often they've been in line with other banks also having difficulties. One thing that's been happening in the last year or two that Goldman has addressed and continues to work on is trying to get more business from corporations, from large multinationals, from companies that use banks to hedge their currency exposures or their interest rate exposures. That's a fairly different book of business than what Goldman has often excelled in, which is getting the business of hedge funds and active investors.
Right, and this was the earnings call, the first earnings call for the new finance chief, right? Martin Chavez.
Yeah, Martin Chavez had a tough first earnings call, definitely trial by fire for him. A lot of questions about trading. His best argument, and it's one that I think they would have made in past quarters, was, look, you're not going to have a great trading quarter every single time. You go for 8 of 10, 9 of 10, but you do have hiccups, and this was definitely one of those quarters.
So he said it was not a great environment for trading this
Yeah, I mean, he was upfront about the fact that they had difficulty navigating the markets and that there wasn't as much client activity on their books as perhaps some other banks suggested on their banks.
This makes Goldman, though, the worst performing of the big banks so far. We have one more left to report, right, tomorrow. Is that right?
Right. Morgan Stanley reports tomorrow. That will be interesting because Morgan also tends to have a more investor-focused trading business rather than a corporate, multinational-focused trading business. So if Morgan can outperform, that'll be a strong statement for James Gorman and his firm.
Absolutely. We'll all be watching that. But what do you think this means for Goldman going forward? Will they adjust strategy a little bit?
Goldman tends to stick to its knitting while, nibbling at new businesses. They've made a big push into lending and consumer lending and deposits, which is something that's advantageous now in the current regulatory environment. But they've always stuck to trading as their core business, and that will probably continue. They're definitely going to make adjustments, and you have a lot of new people in new spots with Gary Cohn going to the Trump administration. Several people have moved around to kind of adjust. So there are people who are going to redouble, I'm sure, and Goldman will definitely be formidable in quarters to come.
You can't deny that the other big banks are probably enjoying this news a little bit this morning.
Yeah, there's definitely not a lot of tears being shed right now, but we'll see. I mean, the new quarter is already on its way, and Goldman is always a fierce competitor, so I think they'll redouble.
Absolutely. Aaron Lucchetti, thank you so much for that.
Likewise.